Welcome to Dubai Daily, your essential morning briefing on Dubai's real estate market, brought to you by Parag Kundalwal, founder and CEO of Consulta, a Dubai-based real estate consulting and global capital advisory firm. This is episode 22.
And today we're diving into a topic that's absolutely critical for every investor, but often overlooked until it's too late: property management and maintenance. These are the operational gears that keep your investment running smoothly.
Exactly, Lily. It's not just about buying the property, it's about managing it effectively. Let's start with the legal framework. Thankfully, Dubai's real estate regulatory agency, RERA, provides some comprehensive protections.
The big one is the Developer Liability Period, or DLP. It's a mandatory one-year warranty from the handover date. During that year, the developer is on the hook to fix any structural MEP or finishing defects at their own cost.
And recent legislation has only strengthened this. Law No. 7 of 2025 introduces the 3-year stability clause. This is a game-changer for both landlords and tenants.
It really is. It limits rent increases to the RERA, Rental Index Guidelines, and mandates a 90-day notice for non-renewal. It creates a much more predictable and stable environment, which is fantastic for securing long-term, quality tenants.
And if disputes do arise, RERA's Rental Disputes Centre is there as a formal mechanism for resolution. Knowing these protections exist is the first step in effective management. This leads us perfectly into the first action an owner must take: snagging.
The snagging process. So crucial, yet so many first-time buyers are tempted to skip it to save a little money. It's the critical inspection before you officially accept the property from the developer.
And the cost is minimal when you look at the potential savings. A professional snagging company will charge between 500 to 1,500 dirhams. That investment can save you thousands in future repairs.
We see the same common issues time and again: minor paint defects, tile misalignment, plumbing leaks, faulty electrical sockets, and AC malfunctions. A professional snagger knows exactly where to look.
So, the process is straightforward. Schedule the inspection about a week before handover. The inspector creates a detailed report with photos. You submit this to the developer. They commit to a timeline for fixes, typically 30 to 90 days, and you conduct a final re-inspection before accepting handover. Never skip this.
Never. Now, once you have the keys, the next question is management. Do you do it yourself or hire a professional? Let's talk about the fees involved.
In Dubai, professional property management typically costs between 5% and 10% of the annual rental income. For a standard apartment, you're looking at 5 to 7% for basic services like tenant placement and rent collection.
And for full-service management, which includes regular inspections and financial reporting, that can go up to 8 to 10%. Villas naturally command higher fees, usually 7 to 10% for standard and up to 12% for premium services that include pool and garden maintenance.
It's important to know what's included. Tenant screening, lease prep, rent collection, and maintenance coordination are standard. But things like major renovations, legal proceedings, or deep cleaning between tenants are usually charged separately.
Which brings us to the actual maintenance costs themselves. This is something every investor needs to budget for accurately to understand their true ROI.
For apartments, a good annual budget is between 5,000 and 15,000 dirhams. A studio might be on the lower end, while a 3-bedroom in an older building could be on the higher end. As a rule of thumb, buildings over 10 years old might require a 20 to 30% higher budget.
Villas are a different story. The annual maintenance can range from 20,000 to 50,000 dirhams. You have to account for landscaping, pool chemicals and servicing, extensive AC systems and exterior painting every few years. These costs add up quickly.
Then there's the other major cost, service charges. These are the mandatory fees for maintaining the common areas of the building or community.
And they vary wildly. In apartments, you could pay anywhere from 8 dirhams per square foot in budget communities like International City to 25 dirhams per square foot in premium locations like downtown Dubai.
Same for villas. Communities like Arabian Ranches might be around 20 to 25 dirhams per square foot, while Emirates Hills can push 35. These charges cover security, landscaping, pool and gym maintenance, and building insurance.
This is a critical calculation for investors. A property with an 8% gross yield, but high service charges, might actually deliver a lower net return than a property with a 7% gross yield and reasonable charges. Always verify the exact figures before you buy.
That's a fantastic point, Lily. And the quality of what you get for those service charges depends entirely on the community management company.
Absolutely. The quality of community management directly impacts property values and rental demand. We see top-tier management from companies like Ejari in Arabian Ranches and Dubai Hills or Nakheel on the Palm Jumeirah. They are proactive, responsive, and keep the communities immaculate.
And investors should watch for red flags of poor management. Deteriorating common areas, frequent elevator breakdowns, poor security presence, or a lack of clear communication. Do your research on the management company's reputation before investing.
So, let's tie this all together with some strategic considerations for our listeners.
First, factor all these costs into your analysis from day one. That 8% gross yield can quickly become a 6.5% net yield once you deduct management fees, service charges, and a maintenance budget.
Second, for hands-off or overseas investors, professional management is non-negotiable. The peace of mind and quality of tenant they can secure is well worth the fee. Self-management is only viable if you are local and have significant time to commit.
Third, don't shy away from communities with slightly higher service charges if they have a reputable management company. This often leads to better capital appreciation and tenant retention in the long run.
And finally, always maintain a reserve fund. We suggest 10 to 15% of your annual rental income set aside for major unexpected repairs or vacancy periods. And consider property age. Newer properties generally mean lower initial maintenance headaches.
Understanding property management and maintenance is absolutely crucial for successful Dubai real estate investment. RERA protections provide a strong legal framework, but proactive management and realistic budgeting are what separate the successful investors from the disappointed ones.
Professional snagging, quality property management, accurate maintenance budgeting, and community management research are, as you said, Daniel, non-negotiable elements of a sound investment strategy.
That's all the time we have for today. For expert guidance on your Dubai real estate journey, you can contact Parag Kundalwal at Consulta. You can find him by searching for Parag Kundalwal on LinkedIn, on his website at consultadxb.com, via email at parag@consultadxb.com, or by phone at +971 58 596 4631. Dubai Daily is here for you Monday to Friday.